first episode. Done. Done. We're live. We're live. Okay. We're live on LinkedIn. We're live on YouTube. I've sent a message on WhatsApp. And we are good to go. Let's get the comments rolling so we can begin. Good morning, everybody, says Mr. Tarun. And on behalf of everyone, I say good morning to you, Mr. Tarun. How are you doing? Shall we begin? Are we good to go? It's already 8:10, so we don't have much time. Just let me know if I'm audible, and we will begin right away. Yeah? Bum bum bum. I guess I am audible. So let's begin, right? Let's begin. Yup. Great. Thank you, Mr. Jindal. Thank you, Mr. Tarun. We shall begin. Bum 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 bum. Bum 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 bum. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We are working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! But before we go, gotta follow tradition, right? The sweet and sacred tradition of the simultaneous sip. We'll all sip something together and it'll bring us good luck, as it always does, every day without fail. And all you need for the simultaneous sip is a cup or mug, a glass, a tank, a chalice, a stein, a canteen jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. I like hot water with some black pepper in it. And here we go! Oh my god. Beautiful. Let's do it again. Sublime. You know what the simultaneous sip says, right? You know what it says? It says that you are not alone. It says that we are in this together. And that's such a beautiful thing to say. Good job on the sip, by the way. I could feel your sip. It was good. Let's begin. A lot of news, a lot of heavy data flowing in from all directions. So brace yourself. It might just seem to be a bit heavy, but if you pay attention and if you get your thoughts right, we'll get through it. Okay. The situation is hope to finalize US trade pact by now, says Mr. Goel. We all know what's happening with the Trump tariff situation. Everybody knows the 50% tariffs that have been levied on the half of all the stuff that exported to US, 100 billion, about 90 billion, $45 billion getting tariffed, a lot of penalties flowing in. You know, the bag is heavy. Everybody is stressed on what to do. Textile, gem and jewelry, what were the other players? Shrimp, and so on, and auto components, steel. These people are facing a lot of tariffs. These people are troubled. And these tensions have led to a lot of rigmarole as far as the whole trading equation is considered. Now, India was trying to see US as a major trading partner. US is the only play where India has a trade surplus, one of the very few countries, and certainly the only large country where India has a trade surplus. India has a trade deficit with everybody, right? Essentially everybody. We import a lot, export very few. material. So India has a trade surplus with US. However, that gets a bit of a jolt now. However, a lot is happening in that direction. A question from Mr. Aman Killa: is only pharma exempt from tariff? Not just pharma, electronics is also exempt from tariffs. Pharma and electronics, these two, basically half of what's going on, are exempt from tariffs. So rest of it, which is majorly textile, gem and jewelry, shrimp, auto components, steel. This is the problem. Now, the talks are on, and the talks were supposed to be advancing, but they got stopped right as this tariff situation hit, right? And now it's a bit of a hassle. While this is happening, Indian refiners and Indian, these people have literally responded to the market situation by actually halting a bit of Russian imports, right? So uh, that particular play, all of that is moving to China. All of that is moving to China. So US has essentially just totally failed as far as this particular strategic maneuver was considered. It turned out to a big blunder, right? It turned out to be a big, big, absolute failure of a blunder. Now, while that is happening, India is making a lot of strides as far as its domestic market is considered, which is where the energy is, right? Which is where the action is, the domestic consumption play. Now, that consumption play has led to a lot of flux, right? You've seen the income tax rebates, basically income tax exemption for people earning under 12 lakhs, which is most of people as far as our per capita is considered. Then you saw the GST play that is happening, right? The rationalization 5%, 28 to 18%, and so on and so forth. 12% going away, 99% of items under 12% GST going towards 5%. Then there was the interest rates which have come down by RBI, the rate cuts, which is basically a move to spur economic activity. We've discussed this a lot of times, but all of this is happening and leading to a lot of manufacturing action. So Mr. Satish says there was a report saying petroleum products are exempt from US tariffs. I'm not sure, so I cannot confirm or deny. I Petroleum products. I don't think India even exports any petroleum products to US. But maybe Rush some of no. I think I don't have accurate information, so I'll have to check. But yeah, so some problem. The good news is that there's a lot of manufacturing action which is happening, right? And the good news is that the government is looking at deregulation more seriously than ever. The government is looking at compliance burden reduction more seriously than ever, because what holds businesses back are compliances. I'll just give you an example. When a retailer is set up, when you set up a shop in the market, right, you're supposed to close it by 10, right? And you have all sorts of regulations, your fire regulation, your this and that, you know. But when you're setting up an online cloud kitchen, you don't have those regulations, right? Most of them. Now, what that means is that there's a regulatory arbitrage as far as selling at a shop is considered and selling from an app is considered, right? Which leads to shops going out of business. You understand? This is called regulatory arbitrage, and what the government is looking at doing is trying to deregulate, get out of the way so that the compliance burden gets out of the picture. Now, uh, and of course, attracting new investment is considered. So when they attract new investment, a lot of good news happens, which is what's happening with the semiconductor play right now in India. So they just displayed the first semiconductor chip that was manufactured in India. Now, this chip is essentially, it was cutting edge in 2020, right? So in 2025, of course, it is a pretty, uh, you know, let's say, outdated technology. However, uh, this is a huge deal as far as India is considered. This is just uh, extraordinary what has happened in India, because we really lost the bus, right? It was many, many decades of lost effort in this direction. Right now, we discussed the controversy when the government claimed that Mr. Robert Noyce came to India and then he went away from India and went to the other Asian markets because of our Inspector Raj. Can't confirm, can't deny, right? We'll have to believe that kind of a situation was with that claim. However, what's true is that we didn't make any progress. And now India is looking at moving forward with this play. Now, even if this particular chip is 25 years old, right? It doesn't matter, because this is the beginning. You remember when we were beginning to manufacture smartphones in 2017? It was essentially a joke, right? It's not a joke anymore, because everything has cascading effects. So all you got to judge are not just the outcomes in silos. You've got to judge the second order effects, the cascading effects, the third order effects, and so on and so forth. Right? Everything has cascading effects. Now, there are two big plants that Tata has set up. One is in Dholera, which is in Gujarat, and the other is in Assam, right? And all of these plants are leading to serious activity, which we are going to discuss, right? So a lot of big claims, of course. India will hold big share in the $1 trillion chip market. The global semiconductor market is currently worth 600 billion, and India's smallest chip will soon drive the world's biggest change, right? Uh, so, semiconductor mission. So, Murugappa Group's CG Swami. We talked about CGS. We talked about how the head of CGS made a very interesting analogy. He said uh, semiconductors are now the steel, the new steel. And we discussed why he said semiconductors was the new steel, because that is a book reference, right? And it's also a very big, important historical reference. Now, what that historical reference was, just to remind you, it was steel is the arsenal of democracy. That's probably something FDR said, World War context, you know, when American steel manufacturing essentially led to a lot of planes, and then they basically demolished Germany, right? So, steel is the arsenal of democracy. Uh, Now, Peter Navarro, the trade advisor to Trump administration, repackaged that particular line when people questioned him that, hey, we are an $80,000 per capita income country. Why are you asking us to make steel? You know, why are you bringing steel back to United States, manufacturing of it? And he said, steel is the arsenal of democracy. There's a book called Arsenal of Democracy, right? Which outlines the whole FDR, Henry Ford play. Now, and Mr. C.G. Swami's head said, semiconductor is the new steel. And he's absolutely right, right? Because semiconductors, essentially driving the whole AI play, are the new steel for the country, right? So, what the government is looking at is in 2021, India launched the semiconductor mission, right? 2021 so far has gotten $18 billion of 1.5 lakh crores of investments through 10 projects. 1.5 lakh crores, $18 billion worth of projects, worth of investments having been gathered in the last 4 years. 1.5 lakh crores. Now that's what we were talking about, right? The government didn't outlay such a plan. So Dholera plant is 95,000 crores. Assam plant is a huge amount, 10,000 crores. Then there are other plants which are being set up, 5,000 crores. We discussed, right? 10 plants, and so on and so forth, right? And a lot of companies are essentially, CG Power is also beginning with its pilot plant. A lot of money is going as far as the semiconductor play. And then comes the ISM 2.0, right? Now, this India Semiconductor Mission into 2021 is set. Now they're saying ISM 2.1, which is basically targeting at the second level of what the manufacturing play is considered. Now, when it comes to the second level of play, right, what kind of players come, you ask. Now, we've discussed this, but we've got to talk about it because it's very, very important. What kind of players do you expect in a semiconductor chip manufacturing play, right? Uh, Very interestingly, people who manufacture medicines and chemicals, right? Those people become very relevant, right? Like Merck, MSD. Now they become very relevant suddenly, right? Because semiconductors is all a lot has a lot to do with uh, like fine chemicals, very high quality mineral play. So Merck is coming to India. Merck is saying that we are going to be working with Tata, we're going to be working with all these players to essentially judge what we can do. So not just Merck, a Japanese company is also setting up in India an office in Dholera and an office in Assam, where it would be helping these particular companies, uh, you know, with the design and implementation of it. So it's just very small offices, 300 engineers in each office, but that's going to be very important. So a lot of flux happening as far as the whole chip manufacturing play is considered, right? Uh, and then with the whole China equation warming up, a lot of Indian businesses are going to China to get some sort of investments, to get some sort of uh, you know intellectual property, learnings, and so on and so forth. Hire, which is the Chinese heavy, what is it called, consumer durables company. Now they were stopping with their IP transfer play, right? Because they weren't interested in it. Bhartis were looking at that. Now they are suddenly talking. So easier investment of China is coming to India, and Indians have started going to China yet again. Now this is good news and bad news, because China is an endless sea, right? China is infinite. China, by the way, is making uh, a solar plant which is the size of Chicago. China by 2030 will be making so much of solar energy, which will be equivalent to US total consumption of energy in a year, right? So China is infinite, and this kind of dependency on China was supposed to be curbed, right? But the changing play has led India to China's arms. Movement seen in rare earth magnets, higher Dixon deal make fast progress, right? Higher stake sale plan progresses with multiple meetings. So Hire was not looking at selling its stake, and as it sold its stake, it was also looking at not transferring the IP. All of those discussions have started moving forward, right? Uh, India imports about 60% of all electronic components from China, right? And Indian CEOs are rushing, as far as that whole play. Ms. Sanchari Ghosh writes, uh, good morning, folks. Good morning, Ms. Ghosh. China's solar play seems to show foresight in terms of energy sources. So China has made so much of investments in solar and in EV and in the new frontiers that the world can just stop, and China will be able to serve the entire world. China's solar output is more than the world combined. And it's not just solar. China's steel output is more than the world combined. China has 95%, 90% of all EV value chain vertically integrated, from minerals, refining to final production, cathode, anode. They have like 90% of each component as far as the whole EV play. So no matter who wins on the EV front, China wins, because they have the entire battery technology sorted, right? And they have it in control. So nothing moves without China. And the whole Atmanirbhar Bharat was basically independence from that kind of dependence, right? But that's gonna take a backseat now. So a bit of a problem there. Moving on. Uh, SBI has raised 500 million via overseas bond sales. Now we've discussed, viewers of Thinkers Frequency should remember why Indian corporates have been successfully raising bond. You remember, right? Can I get a cheer on that? It's a very good important play, and then we're gonna have a very good discussion as far as the whole bonds are concerned, the market of bonds. Why do you think SBI has been able to raise $500 million via an overseas bond sale? Why? Uh, Go ahead, please. Why? Why do you think it's happening? I'll take another sip. Capex? No, 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 not Capex. It has to do with the sovereign rating change, right? Sovereign rating change. India got triple B from triple B negative, and that sort of changed the bond market. Rating plus good balance sheet. Yes, Mr. Tiwari, 100%. So SBI has been able to. SBI has joined yet another company. So Samman Capital, Muthoot, now SBI, then there was Hero, and so on and so forth, right? All these companies have been able to raise bond market tap the bond market very successfully. Now, there's a lot of confusion as far as how bonds work, right? Now, I got confused as far as the whole bond play is considered. I'm sure you must be in a better situation, but let's just talk about. So there's a news says gilt fund investors can now buy now, cash out later when yields fall. So that's the gilt fund play, and they're talking about how bonds are priced. So I'll just tell you what a bond is and how it works in general. Okay, so bond is a paper which you give to somebody in exchange for cash which you get, right? It's essentially a debt paper. Got it? Debt paper. It's instead of going to the bank for taking a loan, what you can do is issue a paper, and that is a bond. Okay. Now that bond has a principal amount. Okay. Bond has a principal amount. Let's say 100 rupee. And then there's a coupon rate. Coupon rate means the interest rate. Okay. So 10 rupees. Okay. That is 10 rupee, 100 rupee principal, 10 rupee coupon rate. That is the bond. Okay. Now you gave that paper, you got that money. Now you got to give the principal upon maturity and also the interest rate, right? Now what happens is this particular paper is an instrument that can be traded by people, right? Somebody wants to buy that bond from you, from the guy who got that paper, right? He can buy it. Now, why will he buy that? Because he might like to have that interest income, right? And that maturity, and that so on and so forth. So he can buy that bond, right? Now, that brings price of the bond in the equation. Now, how will he price the bond? Will he price it at 100 bucks? Will he price it at 105 bucks? Will he price it at 90 rupees? 90, 95 bucks? What will be the price of the bond? Now, what will be the price of the bond depends on what the market looks like, right? If the market is very green and people are making a lot of money, 10% coupon rate is not enough, right? Then that bond's value will fall. You understand what I'm saying? The bond will not be that attractive. So that 100 rupee paper, the secondary market of it will be like 90 rupees. Because that it's not that fun, right? 10% coupon rate, not that great. So the bond will be trading lower. The price of the bond will go down. But when the price of the bond will go down, the yield will go up. Yield is the money you make on the bond. Yield, how will it go up? Because you bought a bond at 90 bucks. Okay? Now you bought a bond at 90 bucks, but you get whatever you get at the maturity, right? Which was the coupon rate and the price of the bond and so on and so forth. So the yield increased. The price decreased, the yield increased. Yield is the money you make on the bond. Coupon rate is the fixed interest rate of the bond, maturity. So now you know the bond market. Paper, which people, a party gives to the other party in exchange for money. Now that paper gets traded in the secondary market. Price of that trade paper depends on what the market looks like. And price of a bond, if it goes up, the yield goes down. Let's say if that 100 rupee bond, the price went up because people are not being able to make money, right? 10% interest, that sounds great. So what's going to be doing that? What's going to happen is that particular bond will be priced up. Now it will not be 100 bucks. That will be 110 bucks, right? But if it's $110, the yield will fall down. You get the answer? This is how the bond markets operate. Mr. Tarun says this is only for corporate bonds. Government bonds works very differently. Mr. Tarun, I'll beg to differ. The fundamental principle behind government bonds is 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 basically this. Now the dynamics of it, the semantics of it might change, but this is what the whole system looks like, right? Sovereign bonds as well. Moving on. Now, I hope you understood this, because this particular discussion leads to a lot of outcomes. This particular discussion leads to so whenever somebody says, "Oh, bond yield goes up," you'll be confused, like, "Oh, interest rate? What? Bond yield, money you make on the bond." I hope you got it. I hope you got it. Moving on. No insurance license for VC-backed fintechs. So RDI, IRDAI, Insurance Regulator and Development Authority, IRDAI, IRDAI, has basically, not allowed VC companies, VC-led fintech startups to have an insurance license. So why? Why has IRDAI essentially refused to give manufacturing of insurance products the license of it to VC-backed companies? IRDAI has said that we are comfortable with the idea of promoter-driven organizations to get these licenses, but founders don't cut it, right? Founders don't cut it, because when you're talking about VC-led companies, which have founders, which have ESOP pools, which have a lot of stakeholders, and their stakes get transferred and so on and so forth, that is not okay with IRDAI, because insurance is supposed to be a very, very ultra regulated, very stable industry, right? We've talked about how insurance works. So what these people say, IRDAI says, is that, hey, you're a VC backed company, you want to distribute insurance, distribute other people's insurance, be their marketing agency, because we are not comfortable with you manufacturing an insurance product. Now, this has led to shutdown of a lot of startups, because they raised a lot of money as manufacturers of insurance products, right? They raised a lot of money, $40 million, somebody raised $20 million, and so on. Some of them have just shut down. Some of them will have to pivot and find a way, right? Now, what do you mean by manufacturing of an insurance product? Do you understand that? What do you mean by manufacturing of an insurance product? Manufacturing of an insurance product is essentially you writing a paper, right? Writing a product paper which sets the terms and conditions for premium collection and payout, right? So you take the money in premiums, you use that money as a float to do whatever you want to. You take the premiums and then you pay out the portion. That's called an insurance product. You set the terms, right? And float is where the money is. Now you can't do that. So what they do, what IRDAI has said to these companies, what you can do is you can sell these insurance products as a marketing affiliate and make money as commission. So this is what IRDAI has done. Basically, it wants stability on the cap table as far as the whole play is considered, right? So Navi got Mr. Sachin Bansal led Navi got this license, and there's another company which got license. Somebody got a license just by acquiring an existing insurance player, and so on and so forth. So these companies will have to find a way. So that's a pretty interesting, Go Digit. Does it affect Go Digit? That's a very good question. Go Digit, is it an insurance player or is it a marketer? I'm not familiar with Go Digit's business model, but I can look at it. So do you want me to look at it? Just one second. Go Digit Wiki. Go Digit Insurance. Go Digit Life Insurance. Go Digit Life Insurance Company offers I'll have to have a deeper look at that because that might just be inadequate, you know. So I'll have to read Go Digit's business model and then I could be able to tell you. Mr. Sai asks, Hi Nishant, what's the relation between yields and rate cuts? Well, that's a very good question. So let's say if rate cuts happen, the rate cuts mean that the loans will be cheaper. Loans will be cheaper means the markets will be up. The markets will grow. The market will grow means that people will get a serious return on capital in equities, right? If equities become very attractive, uh, bonds might just not be that attractive. If bonds are not that attractive, their prices, you know, will rise, and that could be their yields could come down. Now there could be another way of looking at it. So if interest rates come down, you know, bank loans are gonna get cheaper. If loans are gonna get cheaper, uh, bond bond interest, why would somebody raise a bond if loans are cheaper, right? If loans are very cheap, now if loans are very cheap, bond will be less attractive. If bonds are less attractive, prices of the bonds will go up. If prices of the bonds go up, the yields will fall. So in my reading of the situation, if interest rates come down, bonds should yield a little less, right? That's what I reckon as the thought I shared with you. However, these things are slightly more complicated than that. So while my reading might just be correct, we'll have to do a deeper analysis. Do you want me to look at ChatGPT and what it says? How do you think will rate cuts influence bond yields? Okay, so let's see my analysis, how that particular play. So rate cuts and bond yields are two sides of the same coin. How the connection works: when central bank cuts policy rates, lower interest rates, existing bonds that pay higher coupons suddenly look more attractive. Investor pile onto those existing bonds, their prices rise, and their yield falls. Okay. Market expectations. Yield just don't react to the rate cut itself, signals about the future. If markets think rate cuts are coming, yield across the curve may fall in anticipation. Short term yields drop, long term depends. So, yeah. Rate cuts generally lower bond yields. So, that's what I said, right? I was right. I'm happy that I was right. Miss Akshaya says interest rates are more in corporate bond than FTs. Well, that depends on the bond and its structuring, right? But yeah, bonds can sometimes have better interest rates, but that's not set in stone. So that's another complication. But this is why I said it's gonna be, you got to pay attention because this is very interesting. Mr. Tarun writes, bond help liquidity absorption for government. Bonds are obviously very important. Bonds, why would a government issue a bond? That's a very good question. Why do you think a government would issue a bond? Right? It's a very good question. The answer is simple. Because that's what makes the money move, right? The money has to come from somewhere. Where will it come from? Right? Debt is source of cash. The government says that, hey, here's the bond, take the bond paper, right? Give us cash. Then the government can spend that cash and so on and so forth to raise capital. Of course, to move the money. It's not just when you talk about government issuing bonds, it's basically raising capital to move the money, right? So slightly more complicated than that. But yeah, I hope that particular primer on bonds was nice because it's very important in learning the whole lingo is considered because it gets a little confusing, right? Moving on, Pratap's new owners feel crunch, may exit. So Pratap Foods essentially just had an infusion of capital. Shareholders led by Autumn Investments Madhusudan Kela are exploring an exit just months after buying almost half the Indore-based chips and namkeen maker from Peak XV. So Peak XV, the VC firm, they sold their stakes to these investors, and just after a few months of buying their share, they are having buyer's remorse. So reaching out to PE guys, they're reaching out to Haldirams, they're reaching out to everybody to essentially, offload their shares, which is funny, but this happens, right? This happens. Moving on. Warburg takes a shine to Kalyan's Candere in talks to buy 10% in jewelry brand for 850 crores. Part purchase of stake via primary deal. So it's a primary capital infusion, not secondary. You realize the difference between primary and primary and secondary, right? Primary is when the company, the money goes to the company. Secondary is when shareholders sell and buy. So if I'm a stakeholder, I sell my stake to somebody else. That's a secondary deal. Primary is when it's very basic, but sometimes people get confused. That's what I said. Global private equity firm Warburg Pincus is in discussion with Kalyan to acquire 10% stake in Kerala-based companies for 850 crores. So, New York-based investor will likely purchase part of the stake from Kalyan Jewelers, while the rest will newly issued shares. So, newly issued shares are basically primary, which goes into the company, and whatever these people buy from the founders or the organization, that's secondary. Now there's another slightly complicated bit, which is Motown foggy what route CES will take past GST 2.0. So we've all discussed about GST 2.0. We've talked about GST, right? The whole automotive GST play. You remember what we've talked about, right? So GSTs are gonna have a different particular slab, right? Small cars are gonna be treated differently. Big cars are gonna be treated differently. 28% to 18% for small cars. Big cars will go up to 40%, and then there is CES, right? Now CES is a problem. Now these people are saying that auto companies see credit mechanism to make up for losses on 600k cars in stock after compensation CES removal. So as the government removes the CES, right? As the government removes the CES, what happens to the particular CES paid already, right? What happens to that? So that is what these people are talking about. So the compensation CES is essentially the extra tax on, let's say, cars, right? This is basically to compensate states for any revenue loss from GST. So because GST is, but it's pretty streamlined, CGST, SGST, and so on and so forth, but it still leads to some sort of loss of GST for the states, right? For some earning. So that's what basically CES does, right? Now, that's why basically over and above 28% of GST on big SUVs, they have to pay like a 22% cess, right? Now, this particular play, when the government says 5% and 18%, right? Now, these people have already got a lot of stock in hand, right? These people have 6 lakh cars which have been bought already, all these dealers, right? What happens with this particular cess they paid, right? Now, there's no norm for them to offset the compensation cess, right? So this particular basically is just unused cess credit. So the cess already paid, stuck in the system. What happens with that, right? And that's like 2 months worth of cars, right? 6 lakhs cars, 6 lakhs cars, basically unused money. What happens to that? Now, this particular play, these people are saying that you've got to, have some sort of clarity as far as that refund is considered, that migration is considered, and so on and so forth. So, which is a fair ask. But this is what happens with reforms, right? This is what makes reforms hard. Because great moves by the government the whole shift of GST, better for the car ecosystem. Obviously, it's going to lead to a lot more sales of cars, definitely. But what happens is people who've already made those transactions in the past, it's not just like this doesn't happen in real time, right? Input tax credit. So we discussed how a lot of companies were coming up with saying that, hey, we don't need, this is going to lead to an inverted duty structure, right? We discussed the inverted duty structure. You remember that discussion where we talked that a lot of companies said that our raw materials are sourced at 18% GST, and you are saying that the final product will have no GST in case of insurance, or let's say 5% GST in case of medicines. What happens to the 18% we've paid to our vendors, right? What happens to that? That's money stuck, right? Ideally, what happens is 18% you pay here, 18% you get from here, both balanced, essentially no tax paid to the government, right? But that doesn't happen. So it's another story. So these people are talking for the government that, hey, what happens to the 6 lakh cars we've bought already, right? Very, very interesting conversation. Let's see what happens there. Moving on. Latest Pixel phone may be shipped from India. Cost of doing business. Yeah, that's a very correct reading of the situation, Mr. Tiwari. This is the cost of doing business. You got to navigate the waters, right? Pixel phone, Google phone, will also be shipped from India. Alphabet's in advanced talks with Foxconn, Dixon, and Bhagwati. Bhagwati is the Micromax guys. They are a B2B company now, essentially. They make phones for other people on design. To expand production and exports of Pixel smartphones to the latest series. Now, none of this would have happened if in 2017 the government didn't begin the smartphone manufacturing play in the government in India, right? None of this would have happened. None of it. Now, what does that remind you of? It should remind you of something that I've said many, many, many times, right? Now, what do I always say? That outcomes in business are products of political will, right? Outcomes in business are products of political decisions at the time. Now, you might be a great entrepreneur, you might be whatever you are, right? If the government says, hey, real money gaming, you guys are banned, that's it. You might have been making like hundreds of crores in net profit when the entire startup ecosystem was going to the toilet, right? You would have been the only guy making money. But if the government has will, you will get stopped. If the government has will, suddenly you can start manufacturing smartphones for other companies, right? Suddenly you can start manufacturing semiconductors, right? And they become the new steel and so on and so forth, right? So outcomes in businesses are mostly the result of political will. Very important. Nobody talks like that, but it is the truth. It is the truth. And it's high time that people understood it, right? Moving on. Toll collection in August, second highest at 7,000 crores. Introduction of the annual toll pass on Independence Day, higher freight movement ahead of festive season, hike in toll rates, and addition of new toll roads boosted the toll collection to 7,000 crores in August. Now, I've always said toll collection is a very good leading indicator of what might be happening. So if you want to look at the future, what do? You follow the road, because the road has the answers to everything. We've talked about this, right? What's the time right now? It's 8:53. No, it's the time to look into the future, right? And what does the future say if there's a lot of action as far as the freight movement is considered? It means that there is going to be demand in future, that the businesses are expecting a lot of action in future, right? And 25%, just 25% of all toll collection is passenger, rest is all freight. So if there's a lot of freight movement, a lot of toll collection, basically means that it's a leading indicator of where the money might be tomorrow, right? Moving on. Some political chit chat which we best not discuss because it's shit in Al Pacino's voice, right? Al Pacino, sir, This is such a crock of shit. That's what he says, right? Have you watched Center for Women? Great movie. Great movie. Uh, Merck eyes local suppliers in bid to tap growing chip market here. We've talked about this. Chipping in Tokyo Electron plants offices. This is the company, Tokyo Electron. Firm to align new offices in Dholera and unit in Assam. Makes equipment for semiconductor production and setting up offices. Now there's another company which is ASML. ASML makes those machines which write on chips, right? Now they are also talking about India. Now they've not set up anything in India. US would need to consider how tariffs on critical tools for semiconductor manufacturing would drive up cost, said Mr. Christophe Fouquet. Very weird name. Netherlands-based company designs and manufactures the highly complex lithography machine that are essential for producing chips. So they're not introduced anything in India yet, but they say that the tariff situation will have to be very, very careful, man. Basically, they just want to stick to where they are, right? But doesn't matter. What matters is where the political will goes. Moving on. Some companies have gotten money. Online pharmacy Platinum RX gets 6 million in funding. Now, what does Platinum RX do? Platinum RX is basically a clone of TrueMeds, the company funded by Sanjeev Bichhandani sir, InfoEdge. Now, TrueMeds, what it does, it pioneered that in back in like 2018, man. A great company. What it does is, it basically looks at your prescription, right? And on the prescription, there are drugs. It suggests generic drugs, generic versions of those drugs, and saves you money. Because the actual drug might be very expensive, but the generic variant with the same salt is much, much cheaper, right? So what TrueMed's value proposition is, that it saves you money by suggesting you generic drugs. Now, TrueMeds has become a $400 million company, a big company, right? Great news for Sanjeev Bichhandani sir. Now, its clones are also mushrooming. That's what Platinum RX has gotten 6 million in funding by Stellaris with participation from existing fund India Quotient. So that's what's happening. Of course, something good happens. A lot of products in the same range begin. Seco has bagged $28 million short form learning startup using AI. 28 million is a lot of money, man. A lot of money. Moving on. Alphabet's earnings are out. Google. It still basically makes everything from search and Google. Total revenue $96 billion. Advertising revenue from Google search $54 billion. YouTube $9.8 billion. Google Network $7.4 billion. Advertising basically made $71 billion. Right? Platform devices $11 billion. Cloud $13 billion. Google's cloud made $13 billion in revenue, 13.6. Look at me rounding up like $600 million that they don't exist, right? I would love $600 million. But the point is that Google is still an advertising, search-based advertising company, right? 71 out of $96 billion are coming from advertising. And all that advertising is basically happening on Google search, 54%. Then there's YouTube, 10 billion. And then there's Google Network, which is basically Google search, right? Net related. So essentially, they are making 54 plus 7, some $60 billion. $60 billion, right? From search. Isn't Google screwed totally with whatever is happening with search? Isn't it just fried? Because search has fundamentally changed, right? Now, if you noticed, I didn't do a Google search. Usually I do a Google search. I don't like the spoon feeding and the hallucinations and so on and so forth. But the market is clearly slipping away from Google, man. Really, really, right? And it's still 80% of its revenues, almost all of its profit. Gross profit is basically $60 billion. Imagine the company. They are making $96 billion in revenue with a gross profit of about $57 billion. So extraordinary gross margin still, but everything coming from search, and search for the first time in 25 years since Google is in trouble. Their business is in trouble. Mr. Tiwari says there are many generic drugs coming up. One company shares the tests of generic drugs, which increases trust. Generic drugs, India is a generic drug capital of the world. That's what we do. We make generic drugs. So they're not coming. They've already come, right, in India. But the platform which essentially does that, that's an innovation. TrueMeds is an innovative company. In the interview with Sanjeev sir, I forgot TrueMed's name. But yeah, while naming the next generation of company. But anyway, moving on. TCS has won a $550 million euro deal. That's okay. They've rolled out some salary hikes after 5-month delay. That is okay. Moving on. Companies' registration surge despite tariff shock. So companies, that's private limited and LLPs, are rising. The registrations are rising. 20,000 companies incorporated in August 2025. 8 straight month of rise in company incorporations. 6,900 LLPs registered. LLP is Limited Liability Partnership. It's a form of a firm. It's basically a firm. 6th consecutive growth month, right? Now this is being batted as a proof that India is indeed growing. The GDP is indeed growing because a lot of companies getting formed is obviously a good news, right? It's obviously great news, very good news. But what happens is that a lot of companies which get formed are not real companies, right? They are shell companies. What do you mean by shell companies? They're basically tax saving instruments, right? And what is the nature of that? We only get to know like after 2 or 3 years when we study these particular reports. We found out, oh, this company wasn't real. It wasn't essentially, a real company. I'm not saying that the company didn't work. I'm saying that the company wasn't real, right? So that's why this number, while being a very, very good indicator, has a blind spot. I'm saying because, people don't look at things like that. Gadkari, Mr. Nitin Gadkari is backing green hydrogen for all transport. He says that, if we, Mr. Nitin Gadkari has a beautiful singular focus on reducing the crude import, right? Because he thinks money. So he sees that if we import a lot of crude, we're going to drain the exchequer. We're going to ruin the forex. We're going to ruin our GDP. It's going to be a bit of a hassle, right? So all we need to do in his eyes is just reduce the crude import. And he's right. That's a very, very good strategy, right? Very good strategy. So what he says, he's been talking about ethanol. We've talked so much about ethanol. You know it, we know it. And now he's also batting on green hydrogen. So he was one of the players who said electric is good, but green hydrogen is something that should be happening. Now, unfortunately, the cost of making green hydrogen is prohibitive for it to actually become a profitable endeavor, right? So what he says is that we've got to bring down the cost of green hydrogen down to $1 per watt per kg. So he says, if we can replace coal, oil and gas with green hydrogen in various transport sectors, as well as in pharmaceuticals, while bringing down its cost to $1 per kg, India can easily become an energy exporting nation in coming years against an energy importing country now. The current cost of hydrogen as fuel is 5 to 6 kg $5 to $6 per kg. The question is, how do you bring the cost down to that level, right? How do you do that? That's a tech play. That's what you got to figure out. We'll soon start a trial run of green hydrogen trucks on 10 identified highways. Even trains and airplanes can run on green hydrogen. He's very optimistic. Moving on. Core Energy and US firm Flowserve join hands for coolant pumps in nuclear plants. A lot of action happening on nuclear. We've talked about this. There's some UN organization called UNCTAD, United Nations Trade and Development, whatever. They've said the global trade policy uncertainty at record levels. I'm like, no shit, Sherlock. Thank you for nothing. I don't know why these people get money for publishing these bullshit, no value reports, right? Easy money. What's your report, sir? Global uncertainty is leading to trade problems. What the hell do you mean by that? Anyway, moving on. Tesla has sold like 600 cars. Tesla has secured only 600 car orders in India. Clearly, it was probably good that they didn't set up their factory here, right? Anyway, moving on. Yellow pea imports dampen prices. Yellow dal, essentially. There's a lot of imports coming from Tanzania, Mozambique, Myanmar, Canada. They're dampening the prices when there's import. Supply increases, costs come down. Costs come down, farmers don't want to grow it anymore, right? Why would you grow something which has no avenue of making money? So they're saying, bring duties, protect us. So that's what's happening. Moving on. Sugar stocks soar up 20% as government lifts ethanol curbs. So the government has lifted ethanol curbs, and that is basically leading to a rise in sugar stocks because these companies make a lot of ethanol, right? Sugarcane, sugar stocks soar, this particular place. So profits for sugar companies have remained under pressure due to higher cost of production, cap on ethanol prices. If the government revises ethanol prices upwards, and an announcement is expected in October, these company stocks will go higher. Now, will the government revise ethanol's price higher? Because ethanol's price is already high, right? And as it blends like 20% in petrol, it doesn't really help because as far as the cost play is considered, right? Because vis-a-vis petrol, ethanol costs a little more. So largest suppliers, sugar companies are the largest suppliers of ethanol, which is obvious because this is what they do. It comes as a byproduct of sugarcane and so on and so forth. So very good avenue for these companies. The question is, are these stocks a really good bet even for the future? I think yes, because the government is pretty clear as far as its ethanol policy is considered. There's gonna be margin pressure, sure, but the volumes are just gonna grow, right? The volumes are not going anywhere. So the stocks should be green. Sugarcane is very a water heavy crop, mildly worrying to me, says Ms. Ghosh. So sugarcane was being grown anyway. It's not like they're growing sugarcane for ethanol. So the byproduct of it, the skin of it and everything, which the sugarcane industry is huge, right? Sugar is a huge industry. Now sugar companies also supply to alcohol companies and so on and so forth, right? Now this is an additional, product which they can sell. So it's basically using the byproduct. So I'll just give it to you what these people have written. This led to surge in stock price. Ethanol distilleries key growth driver. Sugarcane juice, sugar syrup, and all forms of molasses for the upcoming sugar season. Quantitative curbs on production of ethanol, boosting investor sentiment. So these companies are essentially making the product anyway. Of course, they're going to make it more, but that's okay. Gold touches record high above $3,500. Gold is rising. I read a very stupid report on LinkedIn. Somebody has written that gold loans are a big problem, and gold loans going up means the GDP growth cannot be real. And I'm like, what the hell did you say? Gold loans make sense right now because gold is really, really going off the cliff as far as prices are considered. And we've talked about why gold loans are going up. Because gold loans are essentially a mirror, or let's say an indicator of geopolitical instability or global financial instability, right? So gold is a hedge against that kind of instability. If gold prices are going up, you know where the market is going. So expect some problems. Mr. Ramdev Agarwal, Motilal Oswal founder, has given an article saying Indian equities are going to be huge. Don't worry about it. It's a multi-decade growth story, he says. If you want to read about Mr. Ramdev Agrawal, if you want to read about Motilal Oswal as a company, I'd highly recommend reading a book called Inheritors by Sonu Bhasin ma'am. I've recommended it a lot. Now Motilal Oswal is not an inheritor company, right? It's not a family business, but still it has been featured in Inheritors for our good luck. Very good book. You'll get an insight to where he comes from. ISM 2.0 will be broader and deeper, says Mr. Vaishnav. Thank God. Diversifying trade deals, we've talked a lot about that. GST 2.0 reform story, we've talked a lot about that. We won't repeat ourselves because already it's 9:09. We're gonna get late. The two slab GST structure, it's gonna lead to a lot of good things for the country. I'm very positive. Next gen GST reforms to reduce compliance burden, says Madam Sitharaman. Very, very well done. So on and so forth. Russian oil shifts to China as tariffs hit India. Indian imports tumbled 28% from March highs. China lifts purchases 5-month high. No surprise there. And that's why these people, the US people, are basically, I said, right? Now, when Trump said that India basically offered to kill the tariffs, India has been a very lopsided traded relationship. Now, he was right. India tariffs why Tesla hasn't been able to sell in India? It's a $70,000 car. Cars coming from US and bikes coming from US, they are tariffed at like 200%. That's why Harley Davidson doesn't sell in India, right? Harley doesn't sell in India. Why? Because it becomes so expensive when the Harley comes to India. Because it has to set up a plant in India to sell in India. Otherwise, it just the product becomes uncompetitive, right? It becomes totally uncompetitive. And Trump said that, hey, they killed Harley because of tariffs. They killed our companies because of tariffs, right? So he's right. India tariffs US a lot. But he says they brought it down to zero, but it's getting late. And everybody read it as some sort of ramble. But it's essentially Trump saying that, hey, I'm back on the table. Talk. And let's see what India does that. If India can get a good deal from US while also warming up to China and Russia, it's going to be a win-win-win. Moving on. DOT has rejected a try plan to charge a levy to the urban SATCOM play, 500 crores. They say it's paltry, it's not going to do anything, and so on and so forth. Maruti sees a 6% drop in August production. Vehicle rollout to market demand. India has a big import substitution opportunity in chemical sector. Company has built scale to absorb bulk of output. So on. We've talked about this. Medical device manufacturers allowed to give free spans. Okay. Yeah, that's pretty much it. That's pretty much it. We are sorted. Oh, by the way, Kraft Heinz, it's a very big company. Kraft was a big company. Heinz ketchup guys, they were a big company. They merged to form a $40 billion company 10 years ago. Now they've decided to split yet again. Now why have they decided to split yet again? Because one firm will get the high growth, play, which is the ketchups and everything, and the second arm will include grocery, Oscar Mayer, hot dogs and Lunchables, which is not growing that much. Now, whenever companies are looking at low growth and high growth avenues, the best thing is to demerge, let the low growth company be on the side, raise money for the high growth company. That's the strategy which Kraft Heinz is also doing. It's an iconic company, splitting yet again. So it merged 10 years ago, gonna split. And that's pretty much it, folks. We've covered everything. We have covered everything. There is a very interesting play as far as the whole AI boom is considered. We talked about the worlds, right? The AI worlds. Viewers of Thinkers Frequency would remember we talked about how you can go and create your own world. And if you can create your own world, if you can be a god in somebody else's world, what's the probability that this particular thing is also a simulation created by, your god? It's almost 100% because it becomes the de facto explanation of origin, right? Now, the another implication of that particular bit is, what do you do if you can't solve a particular problem in this world and you want a solution? You can just create a new world with that particular, uh, you know, uh, marker, everything, and run it and accelerate its time. And you can basically see it's basically Monte Carlo simulator on steroids, right? You'll have a much heavier Monte Carlo simulator. You know about Monte Carlo simulator? Monte Carlo simulator is a tool which has been used by finance guys and a lot of people, where you can set the variables, you can set everything, and then you can begin doing something. You can change the price and then see what happens in the model, right? So if you want to see a fire simulation, okay, you want to see that there's a forest. How many trees will you have to burn for the entire forest to catch fire? Okay, so there are a lot of variables, right? 4% trees, 5% trees, 6% trees, 7% trees, 12%, 15% trees, you find out that the whole fire burns no matter where those trees are placed, right? So these kinds of simulation, and a lot, this is just an example, that's Monte Carlo simulator. But a Monte Carlo simulator is limited as far as the variables are considered, right? You can only set so many variables. It's a fixed outcome play. AI, on the other hand, the world which you can create, your world, your the god, where you are the god, it can solve these problems in our world, because it can accelerate whatever is happening with those particular learnings. That's very interesting, right? With that, we come to the end of the 101st episode of Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis right before we punch in. It's 9:15, we're gonna punch in. I wish you a beautiful day personally and professionally. I'll see you tomorrow, same place, same time, hopefully. I need to thank Mr. Tarun, Mr. Jindal, Mr. Aman Killa, Mr. Satish, Ms. Ghosh, Mr. Tiwari, Mr. Sai, and everybody else who joined. See you tomorrow, same place. Bye bye.